About to get started here in just less than 3 minutes, guys. Less than 3 minutes, about to get started. Good morning from Utah. It is 9:05 in the morning in this beautiful September. Super ready to get this session going. Less than 3 minutes, we'll get the session started, guys. Yo guys, just for all of our new subscribers, or for everybody that isn't aware, you need to be subscribed for 24 hours, minimum of 24 hours before the comments allow you to comment on the live session, for obvious reasons. But yeah, just an FYI, in case you can't comment after you subscribe, it's because of that. But I'm going to be getting started in less than 2 minutes. Less than 2 minutes. Alright guys, what's good? Good morning again for everybody that's just tuning in. Welcome to the Inner Wealth 30-day challenge. Right, we're going live for 30 days straight, live streaming for the next 30 days on the 11 a.m. on the weekends, 9 a.m. Eastern on weekdays. Right, challenge I believe ends. I haven't even kind of noted when it ends, but we are on, I believe, day 13 or 12. One sec, let me just check. We're on day 13 of the stream, so almost halfway through. I just want to say thank you guys for tuning in week after week, session after session. It means a lot. And today we're going to be diving onto DXY, and we're going to be more on the forex assets side of things. Okay, tomorrow I'll dive more deeper into indices and dedicate just the entire session to indices. And today I just want to see more DXY, talk about more DXY and about forex assets. All right, cool. So in terms of the US dollar, again, guys, we've been super bullish for a while, moving, you know, targeting these lows and balance, and then now this upside. Lots of objectives have already been traded through very quickly. We have still another solid 20 days in September. We just finished basically our first complete week of September. So and hey, can you quickly explain the challenge? Are you flipping accounts, or are you just trading and going over the charts for 30 days? Yeah. So basically, it's a challenge for myself and for Inner Wealth as a community to tune in for 30 days straight. So I'm not one to live stream every day. So for those of you who are maybe newer to the challenge, to the page, I'm not one to ever really live stream every single day or every single weekday for that matter. As of as of previously, my schedule was just Mondays, Tuesdays, Fridays, and those are the days that I went live with you guys and the sessions that I had. But as of recently, I added this 30-day challenge to challenge myself to get out of my comfort zone, go live every single day, every single morning for New York session, go live and stream every single day. This is in a time of where I usually prefer just to trade by myself. I invite all of you to trade with me live, for the next 30 days or for those 30-day challenges that I'm doing. And so it's to challenge myself and yourselves as a community to show up and grow, and to challenge myself to be streaming more often, because I don't want to just stream 3 times a week. I want to definitely continue to grow the amounts of streams that we do weekly, the amounts of times that we all get together, the amount of value that we put out. That's definitely the goal. So, yeah, thanks for asking, brother. Thanks for asking. So, yeah, just going over trading charts, investments for 30 days live on YouTube every weekday at 9 a.m. and every weekend at 11 a.m. Eastern. So today will be mainly focused around DXY and Forex, okay? And as I mentioned, I'm pretty bullish on dollar. Been pretty bullish for a while. You guys already know that from July, from when we came down into here. I think it was like mid-July, yeah. And we were pulling out. It was just the way that we closed on that monthly was everything we really needed to know. But even before then, it was very clear intent as to which direction we were going to go, right? We ended up taking out these highs. We targeted everything up and used it. All these previous levels of resistance became our newfound support. And I mean, we've been just pumping up this previous week. This previous week was very, very bullish. But I mean, look at all these consecutive up close candles. 1, 2, 3, 4, 5, 6, 7, 8. 8 consecutive up close candles that we have, weekly candles that we've had. 8 consecutive bullish weeks. That's beautiful. 8 consecutive bullish weeks. So now, give me 1 sec. Let me take this off because that's not on the weekly. But you guys will be able to see that area a lot better on the daily. The area that we came to. Last week's weekly objective was this high. Okay. And first it was this high right here. And we hit that, I think, on Monday. It was very fast. And so on Tuesday or Monday or Tuesday morning, we set this second one over here. And that's actually where we came and stopped that for the week. So that was our weekly objective for last week. Okay. This is last week. Monday comes in. We barely tap into this weekly insufficiency right there. And then we just pull away Tuesday. Yep. Tuesday fully respects that area. Look at the bodies. Look how the wicks tap down there, but the bodies just fully respect that area overall. No body closes down there or even through it. Beautiful. Beautiful gap. Beautiful zone. This is why we pay attention to these gaps. Okay. Well, I know I mentioned this one that was a bit lower. We, of course, didn't make it down that way. We left this double bottom right here. This double bottom right here for Monday and Tuesday. Tuesday trades upwards and creates another gap between Tuesday and Wednesday. Okay, but overall, here, you guys can see this imbalance. Okay, overall, that imbalance gets respected. This is the low of that imbalance, and overall, that imbalance also gets respected throughout the week. Okay, we'll pay attention to this imbalance right here. Okay, and now you have Tuesdays and Wednesdays opening gap, daily gap. Okay, and you have Wednesdays and Thursdays opening gap. Okay, notice how price comes into trades up to our weekly objective, rejects down to daily, the Wednesday, Thursday opening gap, and then comes down into Tuesday, Wednesday's opening gap, rejects higher, comes into Thursday, Friday opening gap. Look at that right there. Now let's get even more detailed on the 1 hour. Okay, and now you can see with a little bit more greater detail what went on last week. Okay, Tuesday pumps up, creates that 4 hour imbalance. Okay, now it's not visible on the 1 hour. That 4 hour imbalance also lined up very nicely with this breaker right here. I mean, mitigation candle right here. It's not much of a breaker because it didn't sweep any liquidity. Yep. This mitigation candle right here, this failure to create a new low right here. Lower low, lower high, lower low. Failure to create a new low. And so we create a higher low, higher high. Okay. That shift in structure, the moment that this candle closed above, this becomes a mitigation candle. And you guys can see right here, imbalance, 4 hour imbalance, mitigation candle. So we trade from down to gap, trade right through it, Tuesday, Wednesday gap, reject above, Thursday, Friday gap, down to hourly breaker, 4 hour imbalance. In other words, another gap, insufficiency as well, right there on the 4 hour. And then overall respect Tuesday, Wednesday's gap with the bodies. And trade back into and through to all the way to Asian highs, which we also mentioned live on Friday. Okay. The only thing I probably did not mention on Friday was this 4 hour imbalance that I'm barely seeing now as I'm back testing it with you guys. But besides that, all of these zones were marked out for us, and we were looking at all of these zones to continue pushing price action to the upside. Now, for a second, there could have been a slight chance to move even lower below these lows, but the way that we rejected out of these zones and respected it just really gave us that long bias on Friday and a short bias on indices and EU and GU, which we'll also go over EU and GU. I'll go over indices tomorrow. I want to leave a whole session for forex. I want to leave a whole session for indices separate, just because they're each their own, in their own, I feel like, intermarket analysis. To do intermarket analysis today, we will do EU and GU. And again, any other asset that you guys would like to review as well. Hold on. I thought I took that. I'm still holding from that Friday's trade. But I don't want to worry about any trades today. I just want to worry about breaking the charts down. 1 second. There we go. Okay. So EU. Okay. Something I want to show you guys here on the futures contract. September is... It's about time that we start switching over to October's. Yeah, on the forex ones, it's a little bit confusing, but I'll figure this out. For now, we'll trade on this one, but here I wanted to show you guys this because here on the new contract that's just coming about, we had a bunch of gaps in a previous area of distribution, in a way, in a breaker, because it swept all of this liquidity here. So this breaker had a gap, and last week's high on Tuesday came right into that gap, and we traded away from it from the rest of the week. So even in the futures, you guys can see these gaps. All of this stuff translates the same way that we view structure and the way that we read price action, the same exact way. Just like we respected this gap overall, right? Next week, we may even come into this gap a little bit deeper and then just continue moving towards the downside. It's a very good possibility. We'll see. But here's the old contract, that way you guys can see it a little bit better. The one that I was breaking down was this one up here. This is the one that I do my higher time frame analysis on. So give me 1 sec. I think this one needs to be all time frames. Yep. Okay, so both of these lows, relatively, right? Both of these lows have been a pretty decent target. You know, we may be looking at our way down to these lows over here. Maybe. That's a big maybe. We'll see over here, because we're pretty close to those lows here already. Okay. So we'll see what we end up doing in terms of after taking out this low and referencing back to this chart right here. We may go even deeper as far as down as this gap. But for my higher time frame analysis, you know, ideally I'd want to see this double bottom get taken out right here. Okay. But first, this low, and I want to see what happens after that low. Because if you look at structure, we're still, you know, higher high, higher low, higher high, bullish, right? Higher high here, higher high, higher low, higher high, higher low, lower high, right? Not a higher high, so we got a lower high, but we have yet to get our lower low or our new low. So we'll see if that ends up being the case. But for me, I would love to see this continuation to the downside on EU. On a weekly perspective, last week was just beautiful. I mean, if we're breaking down this whole weekly analysis one more time, and for everyone who hasn't seen it, we'll break it down from... I've been pretty bearish on this, so I'm breaking it down from the top to the bottom. The moment for me, a crucial bearish moment, was this imbalance here. Okay, as price action pushed lower in that premium price action. Okay, and then 50% and below, when I start seeing a very, very large range especially on the weekly time frame, I like to make sure that I'm aware of my premium within that discounted area. So 1 second, I'm gonna divide it differently. I'm gonna split it up like this. Oh, almost got it. There we go. Okay, I'm gonna divide that zone in half and find my premium and discount within my discount zone, because you're not always gonna wait for premium range of this whole entire big ass range. You have to learn how to divide the range and analyze in a deeper manner. Okay, so now we're going to bring up DXY. Wow, I haven't done this one on the right side in a while. There we go. So we're going to study DXY. There we go. Now we can see them a lot better. Okay, and we don't have to go too far away from the range that we have already created on EU and both on DXY. Now note this, DXY has completely taken out the range already. Okay, EU has yet to take it out. That's divergence. Okay, when you see a higher high on dollar, you should be seeing a lower low on EU, and that's not the case here. Okay, so first note on that, there's already divergence, so we'll see how we end up taking out this low. That will make me more confidence on the divergence here. Okay, but that kind of brings me to that point that we may not take out this area. Okay, we may not take out this area. In my eyes, we may respect it if we take out all of the zone first. We may respect this at first, and it may just bring us a little bit higher just to drop us even more. But this area could bring us some level of support, right? And so that's what brings me to that point. That whole analysis is the divergence on EU and dollar. But I want you guys to see this. Okay, the same way that we divide EU, we divide the dollar. Okay, we'll bring this guy here, weekly. Then we'll divide the weekly range in half on the dollar as well. And now to short Euro USD, we want to find premium institutional levels. To go long on DXY, you want to find discounted levels, okay, within your premium range. Right, so we're not going to worry about this side over here on EU. We're just going to worry about this discounted range that we divided in half. Likewise with the US dollar. Okay, so we're going to know everything in that range, starting from from top to bottom on EU. Okay, so on EU, from top we have this imbalance here. We have a gap here, bullish, very small. I won't note it, but it's just know that it's there, right there. We have, look left, another imbalance here. This one is inverted. Okay, cool. Then we have an imbalance here. Boom. Okay, so now we have pretty good premium areas to come back to. Okay, now let's note the discounted areas to target. All right, so we have a nice rejection block right here, and that's really it. I mean, we have the closure of the imbalance right here, the low of that imbalance there. That's really all I see as of here. Okay, we also have the high of the imbalance here, so that's a premium institutional level. So we'll know all of those. Cool. And actually, instead of noting it that imbalance that way, we're going to note it with our white. But just know the high and the low and 50% of it are in play here. Okay? Let's take out anything else that's not relevant to us right now. We're just going to put all the relevant objectives so far and institutional levels, or all our relevant institutional levels. I want to note 50% as well. Okay, make sure we're noting 50% as well. Okay, all right, so now let's move over to DXY. By the way, those who are just showing up, we're doing an intermarket analysis on Euro USD. Okay, intermarket analysis. So let's go over here with the dollar. We're only going to worry about what's in the range. So we got from bottom to top, we have this imbalance here. Then we have this insufficiency. We're going to start from discount because we want to see price action go from discount to premium. We want to go for this imbalance here. Okay. And we got this insufficiency here to the left. Cool. Actually, we don't need to bring them that far forward. Okay, and premium, we have this target, something that we obviously already have over there as well. We have this target. Cool. We're just gonna worry about that for right now. Just that, focus on that. Okay. Besides that, I mean, I see a rejection block as well. And the high of this imbalance here. But besides that, I don't see anything else within this range that's really relevant. So I'm not even gonna note that imbalance, the high of that imbalance there. Okay. So now let's dive into price action. Okay, check this out. Make sure that everything's available on the daily real quick, because I don't want to. Some of these I've unclicked on the daily. 1 second. Okay. Okay, let's dive down to the daily. Okay, so now we have our range, and I'm going to stretch this out so that way you guys can see the equilibrium. Okay. And we're going to stretch it out here on DXY as well. And again, DXY took out the range a lot sooner. Okay. Okay, guys. So now, well, we got all those levels noted, and we're just going to focus on the daily ranges. Okay. The way price action just walked itself down. Drop some sevens in the chat if this is making sense so far. Drop some sevens in the chat if this is making sense so far. Can you look at S? I don't even know what that is. Maybe if we have time for it, I may look at anything, at something else. But if it's not forex asset, then I probably won't look at it. If it's not one of the majors, probably won't have time to look at it today. Okay, so on a daily perspective, just looking at, we're going to be looking at all of our arrays. Let me take these off for now, okay, because I don't want to throw you guys off as of yet. We're gonna walk down the daily, okay. So last week, check this out. Last week, Monday, okay, the way that we pump up, Monday opens bullish, Tuesday takes out Monday, okay, and look at the way that we come to the low end of that imbalance on the weekly. That weekly imbalance, look. We come to the low end of that weekly imbalance level. So now let's notice and follow the same day out here on the DXY, okay? The same day is marked out here on the DXY. Notice how what we do on the DXY as well. Okay, we trade to that institutional level on the DXY. We trade to this institutional level on Euro. Then from here, we pump all the way up unto the high end of that imbalance. DXY pumps all the way down to this institutional level here, to about 50% of that range. Look at that. 50% of that range is that white line. That's where that day stopped dead in its tracks. DXY to the EU to the high of that imbalance. Okay, then you see Euro USD take out this whole previous weekly liquidity as DXY comes into a previous weekly imbalance. Previous weekly imbalance, previous weekly imbalance. Takes out previous weekly high, takes out previous weekly low. From there, you guys can see the very next day, okay, Tuesday comes in, which is last week still. Yeah, this was last week. Thursday comes in, and doesn't take out the previous high, but comes into that weekly imbalance one more time and continues pushing to the downside. So comes into the previous weekly high level, right? And continue pushing to the downside. Now check it out over here. On DXY, same thing. We take out previous weekly low, trade into this weekly imbalance, respect overall, right? I don't see any divergence as of now. Everything's been correlating pretty nicely. So for those of you who are used to trading, indices, notice how much the dollar and the euro really correlate. In terms of indices and the dollar, this week's been kind of on and off. But look at the way the DXY and euro really complement each other. With everything that we've learned on indices on this channel, notice how all the knowledge just transfers over. Okay, so not much divergence here. Price action trades lower, respects this gap, and then moves to the downside. Same over here, we trade lower, we trade into this gap, move towards the upside. Okay, then we trade into this this week. Okay, this is Friday, and then Monday, Tuesday take the same day. DXY doesn't do that. We come into this gap, then we trade away. Same over here. We trade into this breaker. Okay, this is a breaker. This whole up push right here is a breaker. Came in, swept previous weekly high, and then broke structure here on the daily. So this is a daily breaker, or a probably, yeah, just a daily breaker here. Okay, so we notice close below. That's when the daily breaker gets actually noted, right? And then we trade right back into it. Also trade back into the breaker and the low end of that weekly imbalance. Okay, and notice what we trade into the last point, 50%. So from discount back to premium, our last point in the premium range. Notice here too, we start at 50% and below for the week. From discount to premium, from premium back to discount, from discount back to premium, from premium back to deeper into discount. here on Euro USD, on Euro USD and DXY, we took out Thursday's high and Thursday's low on the dollar. Okay, we also on the dollar traded into that previous high level, okay, which was the high end of our range. So after we closed above on our range, while Euro hasn't even taken out the range, DXY, this is the first level of divergence that I've seen so far. But with DXY takes out the range, comes back to the high end of that range, and continues pushing to the upside. Okay, as we saw DXY take our previous daily low, so did Euro right here. So did Euro right here, takes out previous daily high. Trades into a previous area of distribution that was fully left unmitigated. So does DXY, takes out previous daily low, trades into a fully unmitigated area. And you can see this double bottom that we were targeting during the session. Targeting previous daily low and potentially as low as this low over here. 745. I'm going to hold to that low. We'll see what ends up happening. The new week is going to happen, but I'm going to take partials right here. And then I'm going to hold some of the position to this low right here. But I am still holding this. Trade that we called out. On Euro. There it is. Okay, and it was very simple. Actually, let's take this out. It was very, very simple trade. Okay, just how we broke all those other levels down. Okay, previous daily high. We were extremely bearish. Still looking for previous daily high, lower low, lower high, lower low. Looking for our new lower low, daily lower low. I believe it was in the 5 minute that I saw price action trade into this area. We overtook this first imbalance, traded right through it. We created a balanced price range right there. And then we created this imbalance here. And then on the live stream, we also noted that previous daily high. As we were noting this, simultaneously, we were looking at the DXY. Okay. We were looking at the DXY, and the DXY, we had concluded that it was extremely bullish. From our area, we were going to continue flying from after we took out that initial low of the day. Okay, and we had concluded longs. DXY does the exact same thing that EU does. EU returns, DXY returns back to a previous level of support or a previous level of resistance that is now our newfound support because we traded above it. And now what is our newfound, what used to be our resistance can be our newfound support, right? So when we were below this previous daily high, this was our resistance. Then when we were trading above it, it was our support. And now, once again, price action, we're not just targeting it when we were going long from, I believe, this imbalance here. But now we are using it as resistance once more, but as an entry point. And the entry point was like this. Right on the overlap of those two. Stop loss above the high of this second imbalance right above. And we were targeting that first low and then previous daily low. It's precisely where we entered as well. It's on that previous daily high level. I think we only took two trading days last week. We traded for 2 days. It was Thursday and Friday, and then like the rest of the week we really didn't trade. And you guys know that I don't really trade it, that I don't really trade forex assets too much, but honestly, when price action, and I'm not going to dive too much into these right now, but when price action looks like this, you know, look at that Friday price action from high to the low, from the low to the high. Sorry, one second. From the high to the low, and you can just see price action just built up liquidity, went down, went up, just kind of built up liquidity overall for the week. It wasn't like the most eventful, crispiest of cleanest of weeks. I think we traded the shorts on. We traded the shorts here, but besides that, it wasn't like the cleanest of weeks in comparison to what EU did on Friday. And even the rest of the week, I mean, it gave probably more cleaner moves. Respecting bearishness. Bearish 4-hour imbalance here. Respecting bearishness overall. The bearish order flow. Look at the bodies, just respecting that area. 1 hour. The way we just came above 3, initial high of the day during New York. I know there's people behind, you know, that are trading these really clean forex pairs. You know what I mean? Look at that. 4-hour imbalance. Look at the 50. We come into the 50% of that 4-hour imbalance. Look at the way we come into this bearish breaker right here. The breaker that took out that liquidity. Right? You don't have to learn how to swing these, but it's undeniably clean. 50% of that 4-hour imbalance plus breaker. Entry. Right there. Put your stop loss above the breaker. Previous daily low. That's it. You're done. You could be done for the week after that. Yeah, I really don't understand when people like are looking for these crazy risk to reward. They're looking for like 1 to 20. I mean, I see people catch 1 to 20s, but it's usually not like full volume trades. So it's about just learning how to find these very easily simple setups and waiting for them to actually present themselves, because they don't always present themselves. Last week indices, which was just not it. I mean, I think I took we're gonna go over it, but I'll show you guys why I didn't really trade indices. The week before that, we really didn't trade in. We took one trade all week, which was on an NFP on Friday. Our first week of streaming, of 30-day streaming, we took one trade. Our second week of streaming, when we only traded 2 days. We are on day 13, and we've only traded 3 out of those 13 days. And so it's about being patient. As you guys can see, it's not who finds the most setups, who finds the highest risk to reward. It's, can you find simplicity? Can you make price action make sense consistently? Right? Consistently. Can you do that consistently? That's my question. I don't care about high risk to rewards. I don't care about these trades that people post that are like fucking 1 to 20s, 1 to 30s. Because usually no one's holding those full fucking volume anyways. Right? I see it all the time on Twitter, on Instagram. Oh, I caught a 1 to 20. Really? Full volume. that would be a 1 on 20. But yeah, I mean, on this one, you guys know I risk I risk $500 per trade. Right, if you put your stop loss right above here, that was $520 risk. I don't go overboard with my risk. Keep it consistent. Keep it clean, keep it consistent. Right? On forex, I know I just have to be more patient with it. It's not like indices where you just take a trade and then boom, you're done. On forex, you just have to be a lot more patient with it. I'm cool with that. You know, I don't mind waiting to get paid. It's those who learn how to do nothing that will get paid most, I feel like. It's important to realize when it's important not to do anything. But all right, guys. Honestly, that's really how I wanted to break it down for you guys. It's very simple. You guys saw how I broke top-down analysis, how I did. That's basically how I journal for the whole entire week. That's how I break down charts. That's how I look at price action. That's how I find my levels. And that's how I find the entries, is these overlapping confirmations. Good morning, Zach. Silver futures? Yeah, we're not diving into that. Yeah, we're not doing commodities today. Yeah, no, I actually have to run, but I appreciate you guys tuning in. I hope you guys found some value, and I just want you guys to know that if you didn't know this from yesterday, or you weren't able to catch the live session or the recording, the giveaway details, man. Giveaway details, guys. It's very simple, very, very simple. Okay, all you have to do is go to my Instagram, and on my newest bootcamp post, it's the newest post. It's the very first one that I have. Okay, my newest one. I won't be posting anything until this giveaway's finished, so no worries. It's gonna be there, even when you're catching this recording. All you have to do is go to that post, share it on your story. Share it on your story, and you have to tag me in it. Guys, if you just share it and tag 2 friends, but don't tag me in it, it won't notify me, and I won't see your entry. I saw like 40 people sharing on their stories, and I only got tagged in I think I had in the interactions, on the insights on that post, I had 39 shares. And I only have 5 entries because no one really tagged me in it. Only 5 people did. So what you have to do is share that post. Make sure you tag me at Honcho Mindset on IG. At Honcho Mindset. Okay? Make sure you tag me. It's on the screen down below. You guys can see it next to the Instagram icon. Okay? So tag me, 2 friends, and just finish the sentence. Okay, finish the sentence, which is, if you can't identify the liquidity, you're a blank. Okay, if you can't identify the liquidity, you're blank, and just finish the sentence. All right. A lot of people already posted the answer on the comments. Okay, if you would like to do so as well to help the other individuals, go ahead and do so. I don't mind at all. Okay, it's, if you can't identify the liquidity, you are a part of it. Okay, there you go, guys. I also gave you guys the answer. It couldn't be easier. Do those 3 things. It's all, you can do it all at once. Just share it in your story. Tag me and 2 friends with the answer. If you can't identify the liquidity, you are a part of it. All right, guys. Take care. I'll see you guys tomorrow. We'll break down indices. You guys will learn why I stayed away from the indices market this week, why I really wasn't that active these past 2 weeks. You guys, it's the same reasoning. Just takes a little bit more patience. But I'll give you guys the exact reasoning as to why I've steered away from the market. It's going to require us doing an inter-market analysis between all 3 indices. vice versa with with the dollar, and it's going to be quite an interesting session tomorrow. So if you'd like to learn more about indices as well as silver, if Jason comes through with silver, then we'll dive into that tomorrow. But for today, we are gonna wrap it up. Thank you guys for tuning in. I appreciate you guys. Clap easy and trade responsibly. Peace.